Hello friends, this is Dr. Bhavdeep Ahuja here. In this short videos series and video number 12, I'll be discussing a few aspects of mutual funds. Primarily a little bit of introduction I gave you about AUM or AUM as we say, also known as assets under management. So I'll be describing it further. So it is the total market value of assets or capital that a mutual fund is holding. So sometimes a fund manager will actually manage these assets and all the investment related decisions will be there on behalf of those investors. We usually say an AUM is an indicator of the size or the success of a fund house, and we look at the AUM value and we feel happy sometimes that yes, good, there are so many investors already in it, so that means the fund has a good reputation, or the fund has a good standing in terms of its market capital. So we need to ensure that whatever the mutual fund is earning are also added in the AUM value. So don't only look at the AUM, because we may get falsely impressed if it is on the higher side that yes, so many people have already invested, so the fund is surely a good one. Why do I say so? Because this number should not be the only significant factor when you choose the fund. What is the TER, the total expense ratio, the reputation of the fund manager, and the compliance with the investment mandate are other factors to consider when you have to consider about the AUM or the AUM. So sometimes what happens is that the higher is the AUM and you have an expensive manager, and he might be really overrated one. I'll give you an example. There were two funds, Mirai Asset India Opportunities Fund and HDFC Top 200. So they have a different AUM. The Mirai Asset Opportunities had an AUM of around about 4,700 crores, while the HDFC Top 200, now changed to Top 100 fund, had an had a AUM of 14,600, or say roughly 15,000 crore. So 5,000 and 15,000 crore, roughly 3 times more. But if you look at the historical returns, what Mirai Assets Opportunity gave was the 1 year were 21.35, the 3 year were 16.5, the 5 year were 20.8 returns, whereas HDFC Top 200 returns were 15.90, 10.55 and 15.13, 1 year, 3 and 5 year respectively. So it is not always the AUM that is going to make the difference, because sometimes as I said, the overrated fund managers are there. But if a fund consistently delivers good returns, then the AUM goes on increasing as people repose its faith in its returns. It is not only the AUM which is considered first. Usually people look at the historical returns, 1 year, 3 year, 5 year average, before they jot down on selecting the fund. But yes, if the fund is giving a good returns consistently, it has a good exposure, it has a good intelligent fund manager, he will actually give more results, and accordingly the AUM will go on increasing. So what is the effect of AUM on the expense ratio or fee? Some fund houses will actually leave a fee proportional to the fund size, also known as the management fee, because if the fund size is long, the people needed to manage it is also sometimes more. So but again, it can be a flat rate also, it can be a percentage also, depending on the number of units you hold. But the fund performance has no relation to the fee that you pay as charges or the total expense ratio as it is there. So sometimes you pay with the fund with the higher AUM will have a higher TER also, although there has been a mandate by the SEBI to actually control that. So if we are talking about the expense ratio, let me now further divulge you a bit on a TER, or what we know as the total expense ratio. What exactly a TER is? It is basically the annual fee which an investor is charged for the management of funds. So they're also known as the annual fund operating expenses, or sometimes the expense ratio or the total expense ratio. It is actually the total sum which is payable to the fund manager or the AMC. So with the fund manager, with the help of team of research analysts, other experts, allocate and manages the total fund, which include the auditor and the advisor fee also, and they also advertise the fund also to maximize return and manage risks. So if the assets are small, then the expense ratio can be high sometimes, because the fund has to meet its expenses from a restricted or a smaller asset base. But if the size is large, so then the same can be lower also. So in September 2018, SEBI actually reduced the TER of the mutual funds and set a benchmark that they cannot charge above a certain limit. So that is where you actually the SEBI drew a line. So it was actually divided into various components. The TER, the total expense ratio, they say, is a component of so many charges or fees which are included in that. So what are those charges and fees? So there are predominantly three. The number one is the management fee. So obviously in the form of formulation of investment strategies before actually investing the money, whatever they invest as an investment for the mutual fund in the underlying assets. So they need to appoint people who are having highly relevant educational experience, fund management experience, and of course the professional credentials. So usually the annual fee for investment advisory is 0.5 to 1% of the fund's total assets. So then the second costs are the administrative costs. You can say these will include the expenses of running the fund, record keeping, customer support service, information, emails, communications. All those are actually attended to very shortly. We all, those of us who are invested in mutual funds, do get occasional communication from our mutual fund houses, and these come at some cost. So again, these are also fixed at a percentage of funds assets totally. So the third type is the 12-1B distribution fees. Some fund houses collect the same for advertising and promotional purpose. So a 12-1B is a annual marketing or a distribution fee, which is usually 0.25 to 0.75% allowed of a fund's net assets. So usually they charge their shareholders, or you can say the fund holders, to promote the fund to the other investors. So these fee combined are the component of the TER, the total expense ratio. So how does this TER impact you actually? For example, if you invest rupees 20,000 in a mutual fund and if TER has 2%, so that would mean that you need to pay 400 to the fund house to manage your money. You won't pay it separately. They'll actually charge you 400 and you'll get the services for 19,600 only. And similarly, if your fund returns equivalent to 15% and your TER is 2%, that means your return will be equivalent to 13%. So the TER is more in the regular funds, but it is less in direct funds, less constitute about 0.4 to 0.5%, because there are certain charges which are inherent in that. So in TER sometimes the commissions and fees are also included. So these expense ratio implications are there for every investor who is investing in mutual funds. So I'll give you a few more examples on TER. For example, if you invest rupees 50,000 in a fund with the expense ratio of 2%, that would mean you are paying actually rupees 1,000 to the fund house to manage your money. So if a fund earns rupees 10, so you can say rate of interest 10% and has a 2% TER, that means you will have a 8% return for the investor. So your NAVs are reported after netting off the fees, and hence you should know with what your fund house is deducting or charging as your expenses. Usually the fund ratio ranges from 0.1% to 3.55% for many funds in India. I'll give you one more example. If the fund handles actually 10 lakh in its assets and collects rupees 15,000 in fees from and other charges from the fund holders, so the expense ratio becomes 1.5%. So total assets of mutual fund X is equal to if 1 crore and administrative expenses are 1 lakh, so that would mean the other expenses are 50,000. So approximately the expense ratio is total expenses over total assets. So that would mean 1.5 lakh, one administrative 1 lakh and other expenses 50,000 divided by 1 crore. It is 1% of your 1.5% of your investment value. So expense ratio is very important, but then it is not again the only criteria. Along with AUM to look at it, primarily the other factors when you choose a fund are important in doing so when you go ahead with such a case. So higher expense ratio can sometimes, if the TER is higher, it can overshadow the decent returns and turn it into very non-lucrative returns. So we need to really make sure that we are in sync with in knowledge of the TER surely. So thank you so much for watching this video. It has been a tad long, but yes, the AUM and the TER has been comprehensively covered in it. Thank you so much. Please do like, share and comment, and I'll be back with another video shortly.